What's up everyone, my name's Robbie, this is Robbie in Manila, and today we're talking Tesla. Okay, so I'm just gonna come out and say this. In the past, I pretty much had written off Tesla. I was looking at Tesla like an auto company with auto industry margins, and maybe one day it would get to the point where it had unit volume like Toyota. So when I did start analyzing the stock in more detail, I did kind of start to see what the hype was about, even though I don't really want to admit it. So the thing with Tesla is that it could be a 2010 Amazon, or it could be a 1997 Microsoft, which actually is a bad thing because it traded flat for 13 years. Or it could be a 2016 to 17 Bitcoin. So I'm going to give my opinion on Tesla, but what I really want to get through in this video is how hard it is to actually value the stock. So on the one hand, you have Morningstar, which thinks the stock's worth $192, and on the other hand, you have Arkhanvest, which thinks it's worth $1,500. Honestly, that's a pretty huge price difference. For my Scotch drinkers out there, it's like the difference between a Johnny Walker Blue Label and a 25-year-old Macallan Sherry Oak. One of the reasons Tesla has such a wide variation in what people think it's worth is because of the uncertainty with parts of its business. In fact, some people investing in Tesla are already projecting billions from an industry that's almost not even created yet, and I'm not talking about the electric vehicle industry. So when it comes to figuring out how much Tesla should be worth, it's really about summing up the different parts of Tesla and then figuring out a total price. And the thing is, some of those different parts of Tesla have so much uncertainty, yet so much potential if they pull it off, that I get the hype. So if we break Tesla into different parts, there's really three main parts that I would focus on. The first part of Tesla is, of course, the car company. The second part of Tesla is the energy and storage company. And the third part of Tesla is the robo-taxi company, which I'll also call like the tech company. Okay, I'm gonna humble myself here and tell you that I did post a comment on one of Charlie Chang's YouTube videos. By the way, he's got a great channel, check him out. And I basically said that Tesla is worth no more than $800, which post-split is about $160, and today it's trading at $405. So yeah, you could say I was a Tesla bear. So yeah, I got some hate from some Tesla bulls, and I got... okay, boomer. So now, after doing a deep dive into Tesla, I'm here to tell you that I was wrong. Well, kinda. Just keep watching and I'll explain. So most of what I'm going to talk about today on Tesla is fundamental analysis, but I will talk a little bit about technical analysis, take a look at the charts at the end of the video. And also, please hit that like button so we can algorithmify this video. So as a car company, Tesla's not that hard to value. As a battery company, it's a little harder, but still not that hard. But as a robo-taxi company, I mean, who knows? So if you remember that almost not yet established industry I was referring to before, well, that's the autonomous taxi industry. So essentially, there's a lot of people that think one day Tesla is going to be able to just push a button and basically awaken its fleet of robo-taxis. We're talking like a Lyft or an Uber type thing where they just come and pick you up, you download the Tesla app, you pay Tesla a fee, and they make money from taking you and driving you around in their autonomous vehicle. So this is definitely something that can happen in the future, but I think the more important question is, how soon will it happen? So not to get too much into this, but as I've been doing my research, I now understand that there's different levels of autonomous vehicles. So Tesla's been able to get to level 4 autonomy, but the main goal for every automaker is to get to level 5. And the thing is, for Tesla and all the other automakers, this can take a while to actually get to. So on Tesla's vehicles, it uses cameras, radar, sonar, and GPS for its fleet of cars, which may or may not be able to reach level 5 autonomy one day. Or honestly, maybe what we should be saying is a level of autonomy that will actually satisfy regulators. Now on the other hand, you have companies like Uber and Waymo, who essentially use a more accurate LiDAR system, which is this ugly looking thing on the top of the car. So on the one hand, LiDAR is more accurate, at least at this point in time, but also it costs more money. But as time goes on, LiDAR systems may come down in price. Okay, so hopefully you're with me so far, but basically what the bulls are saying is that the whole robo-taxi part of Tesla is a big part of the future of Tesla. And so in my view, from what I've read, I do think that autonomous vehicles are still probably a while away. Even if Tesla got close to level 5 autonomy today, there's still a lot of politics and regulation to get through to get the cars on the road. There's also a question of adoption. Will you feel safer in a self-driving car, or will you still want an Uber to come pick you up with someone driving it? So basically, there's questions on the industry that I'm not 100% sure the industry is ready to start blooming right away. So in my opinion right now, I think time is the enemy of Tesla, because I think Tesla has the clear advantage right now in their fleet of vehicles. If say next year Tesla got close to level 5 autonomy and they could awaken their fleet, they have the clear advantage. But if they're 6, 7, 8, 9, 10 years away, then that's a lot of time for other companies to catch up with them, and maybe even competitors that aren't even on our LiDAR yet. Get it? Okay, let's take a peek at two different research reports with vastly different opinions. On the one hand, you have Arkhanvest, which invests in disruptive technology, and then on the other hand, you have Morningstar, which is a very respectable research firm. So let's take a look first at Arkhanvest. So I will say that this report does get quite a bit of criticism, but there's also a lot of Tesla bulls who point to this report, and so, you know what, just make your own conclusions. You do you. Remember, when I'm recording this video, Tesla is actually trading at $405 per share. Arkhanvest bear case is $300 post-split and $1,500 pre-split. The bull case is a whopping $3,000 post-split or $15,000 pre-split. And their expected value by 2024 is $1,400 post-split or $15,000 pre-split. So according to this, if you bought Tesla today, you'd have a nice healthy 560% return by 2024. So that's what their expected value is. That's between their bull and their bear case. So they think that's actually gonna happen. So let's see how they got those numbers. So for reference, Tesla in 2020 is expected to sell a little over 500,000 vehicles. So if we look at the bear case, the company is supposed to increase sales 6-fold in the next 4 years just to hit the bear case. The bull case, frankly, it's quite out there. So in the bull case, they'll have 7.1 million cars sold by 2024. Now this in and of itself is not going to be easy, considering capacity isn't nearly what it is right now to get there. They're going to need a lot of capital to invest to get to this type of capacity within 4 years. Now if you look at their bear case, it includes no robotaxi network yet, but their bull case has $351 billion in revenue from robotaxis. And as you probably realize, that's more revenue than all of their car sales combined. So obviously these are really big predictions for Arkhanvest. Just getting to 3.2 million cars sold is going to be hard enough, and that's just their bear case. Another part of the research that gets valid criticism is the gross margins they use, which is using 33% in the bear case. Now if you don't know what a gross margin is, just think of it like how much money the company makes off of something they sell. Now if we look at Tesla's peers today, Tesla has a gross margin of 19%. Looking at a company like Toyota, it's got a gross margin of 16 or 17%. So the only company with a higher gross margin than Tesla is Ferrari. So yes, the gross margin of Ferrari is over 50%, but you gotta think of how much more money a Ferrari costs than a Tesla Model S. There's way more room for margin. So one of the things that Arkhanvest is banking on is that Tesla's technological innovation is going to allow it to get higher margins over time. And it's definitely possible for Tesla to have higher gross margins than other auto manufacturers because it costs less money to make an electric vehicle. But having a gross margin of 57% for a company like Tesla, who's trying to now develop a $25,000 vehicle, is going to be really hard. And so if Tesla's gross margin is like 25% or 28%, it's not going to be good for the valuation that Arkhanvest has done, because Arkhanvest is assuming a 33% up to a 57% gross margin. Also, if there's things like recessions or production issues, it's also going to really hurt this valuation as well. But in the end, if Tesla pulls this off, Ark is going to look pretty good. So that was the Arkhanvest report. Let's take a look at the Morningstar report. So Morningstar has a price target of 173 for Tesla. Essentially what they think is there's going to be a lot more competition in the EV market going forward. And Morningstar also doesn't think that things will move as quickly as Ark does in terms of autonomous vehicles. So Morningstar has two different 10-year scenarios. In terms of autonomous vehicles, in one scenario, Tesla controls 10% of the market, charging 25 cents per mile. Now, Morningstar thinks that this is worth an extra $13.3 billion for Tesla in today's dollars. And their other scenario, which they say is a hyper-aggressive assumption, shows a robotaxi industry worth $1.2 trillion and Tesla capturing 50% of the market share and charging $1.50 per mile. This would add $1,420 to Tesla's stock price post-split. They also say, and I quote, "We see as unlikely, given how much competition will likely be operating in 2030, given Uber, Lyft, GM's Cruise, and other automakers' efforts." So before I go over my opinion, I did say that I would go over some technical analysis real quick, so let's go ahead and do that first. Okay, let me preface you by saying that I am more of a long-term investor than a short-term trader. I know a bit about technical analysis, but seriously, you probably shouldn't listen to me. Anyway, let's look at what I got here. So taking a look at the chart, I do see a little bit of consolidation going on right now. Not much going on with the EMA charts. I'm in the 1 hour chart, so let's actually zoom out to the 1 day chart. So looking at the day chart, you definitely see with the EMA lines that it's more of a bullish trend going on. Be some support going on with the 50-day EMA, so that's probably a good sign. That could be bullish. So looking at the 1 hour chart again, we have Tesla. It's trading at 405. I do see some resistance at 408. As can be seen in this area and this area. So if Tesla breaks 408 with volume, I do see a potential of it going up to 437, which is the next resistance area. Taking a look at this chart with a longer time frame, I don't see anything going on with MACD or RSI. I don't see any divergence. I don't see any indicators telling me anything important. So for me, there's not much going on here. Finally, probably the most interesting thing I'm seeing here is a symmetrical triangle for Tesla. This is something I would keep an eye on going forward. I think that if it breaks out of this triangle anytime soon, it could lead to a big move in either direction. So that's all I have for technical analysis. Again, take this all with a grain of salt because I am no market technician. So in the end, for the two reports of Morningstar and Arkhanvest, you have good arguments on both sides. And if you ask me what I think Tesla's price target is right now, I'm actually more confused than I was before I started looking into all of this. So on the one hand, I see a company that can make great electric vehicles for higher gross margins than normal auto manufacturers. Of course, not 57% gross margins. When it comes to unit sales 5 to 10 years down the road, I think Tesla will definitely be selling a few million cars every single year. As for a vertically integrated tech company with a robo-taxi business, I don't think the robo-taxi industry is going to be that big for years. I think the longer it takes for the robo-taxi industry to get started, the more competition there's going to be and the less market share Tesla's going to have. And if the current rideshare market is any indicator of the future of the robo-taxi business, then assume price wars and lower margins for companies going forward. But then again, if next year Tesla was able to awaken its robo-taxi fleet, then it would be a runaway train because there's no company even close right now. So in the end, I'm not investing in Tesla, at least right now. It's just not the way I invest. I like to find companies that I have confidence in the fair value of the company, and with Tesla, I just don't have the confidence. There's thousands of companies on the stock market, and at the end of the day, I'm just trying to have confidence in companies' fair values and then pay less than the fair value. So thanks everyone so much for watching. That's all we have for today's video. Now please hit that like button and subscribe if you want to see future content like this. Also, why don't you leave a little comment below and let me know what you think the fair value of Tesla is. So thanks everyone so much for watching, and please watch another one of my videos by clicking on the end screen right now.